Hi there, my name is Sarah Thompson, and I'm a Senior Solution Engineer here at Bramasol, with you today to discuss SAP's Revenue Accounting and Reporting solution. During our time together, I want to start by discussing Bramasol's extensive partnership with SAP. We'll then dive in to understand the new revenue recognition standards and how you can be compliant. We'll get a sneak peek at SAP's Revenue Accounting and Reporting solution, and then we'll wrap up our time today by discussing some of the key points and how you can make the right decision for your revenue process. SAP and Bramasol have been partners for over 20 years. Bramasol has participated in or led a majority of the SAP revenue accounting implementations, as well as actively participated in the testings for new revenue accounting versions. In addition, Bramasol has been a co-innovation partner with SAP and SAP Labs. We have also developed significant Bramasol IP to solve a few more complex revenue recognition challenges in multiple areas such as pricing, variable consideration, as well as bringing practical insights from dozens of projects worldwide. SAP's Revenue Accounting and Reporting solution was first released back in 2014. They've had multiple partners and customers helping co-engineer and collaborate with them on this solution, as well as working in multiple industries. This solution is very robust and flexible in helping you enable and track those performance obligations under the new revenue recognition standard. They've built in a rules engine that allows for the solution to be decoupled from order entry and billing systems. It's been designed to provide massive scalability as well as addressing both IFRS specific requirements and those local gaps. Under the new revenue recognition standard, they have proposed a new 5-step model. Within this model, you will start by identifying a contract with your customer. Once you have that contract, the next step is to separate all of the performance obligations out within that contract. Now, these performance obligations are going to be a little bit different than just line items on your contract. Once you have those performance obligations, you can now start to determine a transaction price for each of those performance obligations. That is no longer going to be the VSOE price, but is now a standalone selling price for each performance obligation within a contract. Those standalone selling prices will help you to allocate the overall transaction price within that contract. Then once the revenue has been satisfied for each of those performance obligations, you can then start to recognize that revenue. What SAP has done is they took this 5-step model and they used it to create a solution that would help automate and simplify your revenue recognition process. So what we've got is you will take an order or a contract from a customer. You will then determine a revenue accounting contract. Now within that revenue accounting contract, what you'll see is all of the performance obligations based off of that contract. So it's going to go through a rules engine, and that rules engine will give us all of the separated performance obligations that you'll need in order to recognize revenue. You will then determine that standalone selling or transaction price. The allocation of revenue is going to happen automatically amongst those performance obligations, and then different events are going to take place. The solution is able to handle events, time-based, or percentage of completion events in order to recognize that revenue. And then lastly, based off of those different events, you will be able to recognize your revenue. Now, when I discussed earlier this rules engine, what SAP has done is they're allowing for you to bring in an order or a contract. You can process that through different operational systems, whether it's SAP's sales and distribution, maybe hybrid billing, project systems, as well as non-SAP systems. What it does is it captures those revenue accounting items and processes them in order to create that revenue accounting contract, capturing your pricing conditions, your material information, your customer information in order to give you the correct financial view of what that revenue is going to look like. So let's go ahead and take a quick sneak peek at what that looks like today with SAP's Revenue Accounting and Reporting solution. All right, so when we first come in, this is kind of going to be our guide throughout our demo today. So we've kind of got some abilities to create the revenue contract here, go in, make some postings on that contract, post the revenue into your financial system, then do some reporting capabilities. As a revenue accountant, you're going to be noticing the contracts after they've already been posted. So one way to do that is to have a work list that allows for you to see all certain types of contracts, maybe for a certain company code, certain customers, certain material types out there. What I'm looking at here is really all of the contracts that I have out there for a certain company code. What you'll notice is I've got these revenue accountants or revenue accounting contracts that are out there for different accounting principles. So I've got the new IAS standard as well as the local GAAP. We'll notice that we've got our performance obligations and then contractual prices. And we'll notice there's a couple of them that are the same as you kind of go down these contracts. And that's because as we create a sales order, depending on how many accounting principles you want to have, you can write the rules in order to create these performance obligations and create these contracts automatically. So let's take a step back and start at the beginning of that process. Like I said, when an order, an invoice, or a contract comes in. So right now I have a contract. This contract has kind of already been set up. I've got a certain hardware and software that I want to sell to my customer. If we look at just kind of a generic overall sales contract, this is all the information that we need. So there's certain things such as warranties or subscriptions that may be, or services and support that may be in the terms and conditions of the contract, but really all we need to see is what the material are and what we're going to start recognizing. So once I save this contract, what we'll notice is there's some pre-built workflow in the background that's telling me I'm automatically going to create a revenue accounting contract for this sales order 1908. So if we come out and take a look, this is just a notification telling us that that contract has been created. We come back and take a look at our contract. We can search by specific sales order that is out there, and what we'll notice are those two contracts that have been found. So we've got one for IAS and one for local GAAP. But now we'll notice something a little weird. We now have 4 performance obligations for that contract. Well, we only posted 2 material. So let's go in and take a look at our GAAP contract. Within this contract, what we'll notice is we've got our operational documents over here. We've got 4 performance obligation. Well, there's 2 down here that don't have an operational document. That's because these 2 performance obligations are tied to the other material that was created on the sales order. So for example, we've got warranty that's tied to our hardware. We've got some support that's tied to that software out there. You'll notice they don't have a contractual price, but everything has a standalone selling price. That then allows for us to determine automatically the allocation that's correctly posted as revenue into your financial system, what that allocation effect does. And then as we start invoicing on these contracts, we'll see those invoice amounts as well. So earlier we talked about the 3 types of really fulfillment types that are out there: event-based, time-based, and percentage of completion. Well, here we'll see 2 of them. We've got our event-based off of a specific event. We've got time-based out there, as well as time that doesn't begin until an event. So our warranty is not really going to begin until we deliver on that hardware for that customer. You can drill back into that operational document here. You can drill in and see the underlying information that is being pulled in from your performance obligations. So for example, it's telling us, yes, it's leading to, you've got the performance obligation type out there that we're helping, set up all these distinct rules for these performance obligations. It's coming from SD. You've got the standalone selling price that we're capturing at that level if we had any tolerances. Some of our customers allow for certain percentages or amounts in those tolerances of standalone selling price. We've got our fulfillment types, the account assignments, so you can get into that more granular level detail for reporting. So we've got all the reporting capabilities out there to be able to report all the way down at the profit center level by performance obligation. It's got a time, date, and user stamp on everything, just like any other SAP product, allowing for full audit trail on how these contracts come in from a sales order into revenue accounting. You can also come in and see all the different flags or statuses on this contract. So you can suspend certain postings for just a specific performance obligation. You've got validations coming through. So as it's a rules-based engine, what it's doing is it's validating all of these contracts that are out there, all of the performance obligations and the rules. Once it's been invoiced and fulfilled, maybe it has a billing plan for those certain time-based revenues that we have out there, we can go through and see all of this information. So this is our contract. We've got our 4 performance obligations here. Let's go ahead and take a look at our revenue schedule. So within this revenue schedule, what this is really telling us, it's got all of our contract information up here, but the important piece here is really this summary. So where are we to date on recognizing revenue for our contract? Right now we can start recognizing some revenue, about $371 worth, but we haven't posted anything. Well, that's because our software and support, or that time-based revenue, well, that was created as soon as the contract was created. So those have already been able to start being recognized. Planned revenue is going to be anything that has a time date to it. So if we've got a timestamp for any of those time-based revenues, we can actually plan that out over the life of the contract. Unscheduled is going to be everything out there that doesn't have a date. So for example, it could be your time-based revenue, but that doesn't start until you deliver on the goods issue or you deliver on the hardware. So once that is, this unscheduled revenue, some of it will be recognizable, some of it will move into planned revenue. And then you've got your overall fulfilled progress here. So as we come down, we can see we've got 2 we can start recognizing, then everything else is kind of in waiting until an event takes place. We can also post cost against our performance obligation. So as you've got cost of goods sold out there against these different material, you can post those and recognize those with the revenue as well. So let's go ahead and deliver on our hardware and see what that does to our revenue schedule here. So again, this is an event that will take place outside of revenue accounting. So someone's just posting a delivery on our contract. We picked our hardware that we have out there, post our goods issue, and then we can go back and automatically refresh our revenue schedule, and we're going to be able to see that difference between the recognizable revenue. All right, so we've got that 371 still. Let's go ahead and refresh. Now we've got 6,800. We've got nothing unscheduled, and then the rest of the warranty moved up into the into planned. So we've got 4,000 there. So we've got hardware, software, warranty, and support that we can all start recognizing for that first month. We'll also notice we have some cost associated to that hardware. So we've got $100 out there in recognized costs that we can start posting as well. Well, in addition, we can go out and invoice on this contract. So there are different types of fulfillments. If you wanted to, maybe some of your deliveries or some of your performance obligations you don't want to recognize until invoice, that can also be a trigger to recognize that revenue. So let's go ahead and invoice. Okay, so we've got our delivery and order invoice. Go ahead and post. And what we're going to see now when we go ahead and refresh our revenue schedule again, what we'll see is that we now have an invoiced amount for our hardware as well as our software there. So we've got the invoiced amounts that are out there, and we can go ahead and start posting on this revenue. So again, these are processes that can happen in the back end. They can be batch processes. You can have it refreshed or posting revenue or posting these recognized amounts into the revenue engine as often as you would like. Okay, so we've got our contract here. We've started recognizing. Let's go ahead and post on this revenue so that we can see with our reports what this posting has done. There are three types of postings that we can make. We can calculate all that time-based revenue on our schedule. We can calculate for the contracts and liabilities, the contract liabilities and assets that are out there, and then we can go ahead and post that into ECC. So if we wanted to see kind of the simulation of what that would look like, we can come in and take our contract that we have, and we can simulate before it gets posted into the engine what that's going to look like. So we've got our different accounts out there, the different amounts that are being posted. I can get all the way down into the most granular level detail and see all of those actual postings that are being made. So I'm going to go ahead and take all of this information and I'm going to quickly just post it into the engine. So I come in, I have my contract ID, I can go ahead and quickly just post that in, and what that's going to do is it's going to give us all of the information being posted into ECC. So it's running the calculations, the liabilities, and the posting into ECC. Now again, this is something that's going to be happening in the back end, but I just want to see how this posting gets made in, and then we can go in and start looking at those reports. Alright, so that's been posted. Now we can come in and start taking a look at some of the reports. There are some pre-delivered reports through SAP, so out of the box standard. For example, if I just wanted to come in and take a look at all of the documents that have been posted within a FI. For example, I can look at just my gap posting, so we could take a look at what's been posted here today. And then I can see for my GL document all of the revenue postings that are out there. So what we just saw simulated within the revenue engine is now being replicated into ECC. So you've got that process. As soon as you want to make those postings into your financial system, you can see that here. So you saw those same postings here, the cost, the deferred revenue, what's our receivables adjustment out there, posted into the sales revenue, and you've got all your debits and credits in one location. All right, so if we look down here, what Bramasol has done is we have created a set of reports for our customers that really ensure compliance for these disclosures going forward. So there are a set of disclosure reports that are out there and that you need in order to comply by the new RevRec standards. So we've taken some of these quantitative reports, we've delivered them out of the box to our customers. So for example, the overall disclosures. So if we come in, we can see, we can search by specific contract, we can search by accounting principal, customers, we can get all the disclosures we need for that specific contract. So we can see here we've got our customer information, we've got the types of material that we sold on that contract, and over the life of the contract, what is that going to look like? We've got the contractual prices, allocated amounts, invoiced amounts. We can come all the way down into our posted revenue by year if we wanted to. So the amount that's been posted so far, if we wanted to see that 6,000, we could see that there.
All right, to wrap things up, Bramasol also delivers some additional analytical capabilities. So of those reports that we saw, those disclosure reports that are out there, the impairment loss, the waterfall reports, we have provided also some analytics reports that we have created through the BW to be able to process these on any of really your BI tools that you may have out there. The Bramasol solution really composes three things. So we want to be able to comply under the new standard, have control over that process, and really be able to scale across all the different contracts that you have out there. So it's able to do this because it really supports multiple accounting principles. So you're able to comply by US GAAP, by IFRS, local GAAP. It integrates natively within SAP. So whether or not you're pulling in from SD, project systems, other SAP systems, you're also able to push that information. It resides just as a financial add-in into the finance position to be able to post that revenue into ECC. It has built-in SAP workflow. So for example, we saw creating those contracts, but automatically creates those workflow. If you wanted to have approval set up as well, you can do that. And then it handles multiple ERPs, so multiple SAP instances. Some of the key takeaways Really, you need to stay current with compliance. This is going to transform your finance productivity, but you want to be able to improve your revenue recognition process without all that manual intervention, having to kind of control the information that's coming through so that you can disclose that to your auditors. You can go online and find some additional information about Bramasol here at bramasol.com, Facebook, or LinkedIn. And I want to thank you guys for your time.